there, it's Jazz. So I keep getting DMs from you guys on Instagram asking me how I got this house at the age of 23. So in this video, we'll be breaking down how I was able to actually save money and prepare myself to buy my first house. Now, I will be breaking down this video into 3 parts. That way, if you are interested in one area or the other, I will leave it down in the comments below with the time. That way you can just click on it and skip to that part. What you need to do before you start looking for a house, how much you need to save to be able to pay for the down payment and the closing costs. And the third one is how I was able to save with a low income. That way you can save as well. Now, everything that I'm going to present to you is my personal experience and how I was able to get this house. So I would recommend for you to actually go and talk to a real estate agent. That way you can get prepared for your first purchase. Now, if you are new to the channel, I do focus on making, saving, and growing your money, and I would be extremely grateful if you subscribed and hit the like button if I end up bringing you any value. With that being said, let's get to it. Before you do go house hunting, there are 4 things you actually need to prepare beforehand. The first thing is you have to have a good credit score. Now, my credit score when I got the house was actually really low. It was between 700 and 720, but the credit score that I want you to aim for is actually 740. And the reason why credit score is so important is because the bank is actually going to be lending you money. So this is the way they can actually see if you are someone who is reliable and pays on time. So they will reward you if you do have a credit score that is 740 or higher. And unfortunately, I did make mistakes when I was 18 with my first credit card, so I was stuck with 708. The second thing they actually asked me is 2 years of tax returns. And the reason they do this is because they want to make sure that you're able to actually pay off your mortgage. You have to remember that banks get paid based on the mortgages they give out. But if you fail your mortgage, that mortgage broker will be paying the consequences if you end up not paying your mortgage. So basically, they want to know how much money you make per year and if you have any debt. Not to mention, they want to be able to see if you have consistent income. If you are someone who gets W-2, it'll be easy for you. But if you are self-employed, you will most likely have some issues when it comes to the consistency. The third thing they actually need is a bank statement. Now, they asked me for the recent 2 months of my bank statement, but most banks will actually ask you for 6 months or even 3 months, depending on how your income is or if you are someone with a low credit score. The reason they would do this is because they want to make sure that your parents aren't helping you or you are someone who is doing things illegally. So everything that they ask for is basically to protect themselves and to make sure that they are lending money to someone who is reliable. And the fourth thing they actually asked me is if I had any cash reserves. Now, fortunately, I did have $12,000 that I saved up on top of my down payment and my closing costs. So they were actually okay with lending me money because they saw that I was actually covered for a couple of months in case anything went south. Now, before talking to my mortgage broker, I didn't know they were actually going to do this. So if you are someone who is going to get a house for the first time, I do recommend that you do have some cash reserves on top of your down payment and your closing costs, because if not, they will most likely give you a hard time when it comes to giving you that loan. Now, the second part is how much are you gonna actually pay for your down payment and your closing costs. Now, if you are someone who knows what type of house you want and how much the price is going to range, I would recommend for you to go and look at Bank of America's calculator. I will leave it down in the description. That way you can go and check it out and plug in the numbers. So with that being said, I'm going to bring you to my laptop. That way we can go over this example. So if you go to this website, Bank of America, now Bank of America does give you your estimate for your closing costs and your down payment. So let's say that you are going to buy a house that is $250,000 and you're going to get the loan for 30 years. Now, the lowest they actually get you is 5%, right? So you either have the option of doing a fixed rate 5-year but I do recommend to always get a loan that is fixed rate. Now, right here already it tells me that I have to have saved up $12,500 for my down payment. That means that the loan amount will be $237,000. Now, I'm going to put Phoenix. That way I can give you guys a good example and you calculate it. So the cool thing about this calculator is that it gives you your estimated closing costs. That way you are prepared to know how much you're going to be paying for your down payment. On top of that, your closing costs. So in total, you're going to be paying 12 plus 8, which is $20,000. Now, of course, there are deductibles, but this is just an estimate to know how much you're actually going to be putting down, which is pretty cool because most people only save up for their down payment, but they don't realize that they also have other stuff they have to pay. Now right here, it breaks down on what your closing cost details are. Points and lenders, right here, it tells you how much points you're going to be paying for, the lender stuff. And if you are confused about all of this closing cost details, you can actually talk to your real estate agent or your broker, and they will break down why it's this much. Now, this is just a great tool that I recommend for you to use if you are someone who hasn't bought a house in the past and you want to have a good ballpark of how much you're going to be paying for your down payment and your closing costs. Now, there are different types of down payments you can actually do. You can do the VHA loan if you are a veteran or you served in the military, or you can do what I did. I got the FHA loan. Now, I want to give you a secret, right? I got this house at 3.5% down payment because I graduated from a university. So because I graduated from university, they didn't require me to actually have a job that paid more than a low income. So if you are someone who does graduate, let's say that you are a nurse, right? And you want to purchase your first house. And let's say that once after you graduate, you have a job. Well, guess what? The government will give you the 3.5% if you can prove that you have a new job. On top of that, that you just graduated, which is pretty cool. Now, if you are someone who hasn't went to school or you haven't graduated, don't worry. There's a FHA loan of 5%, which is still pretty good if you ask me. Now, if you do get a loan that is below 15 to 20%, you will be paying insurance, mortgage insurance, PMI. And the reason why you are paying PMI is because you did not risk so much money into getting this house that the bank wants to make sure that if you do default or you don't pay your mortgage, that you do have an insurance that will cover up you defaulting on paying your mortgage. But don't worry about it. If you can get the opportunity to get a house for 5% or less, I would recommend for you to do it because the PMI is between 0.5 to 1%, so it's not a lot. And not to mention is when you do end up getting 20% equity, meaning you pay 20% off of the house, you're able to actually take off that PMI and you can refinance as well. But if you are not able to get the FHA loan because you've already bought multiple houses, you are going to most likely have to put down between 15 to 20%. That is why I want you to use the Bank of America calculator. That way you know how much you're going to be putting down when it comes to your down payment and your closing costs. Now, the third thing is, what did I do to actually save money for this house? Because I will admit that I was going to school. I was taking 6 classes. On top of that, I was working. So how was I able to actually save money? The first thing I did is I sacrificed my free time and my freedom by going back to live with my parents. I was actually living in an apartment and I was paying $900 of just rent. So I decided, you know what? I want to get a house. So what am I going to do? I'm going to go live back with my parents. Fortunately, my mom actually gave me the opportunity to do this. So I went back home, I saved that $900, and I got to save money on electricity, food, and other things because I moved back in with my parents. And I'm going to tell you something. I was a 22-year-old going back to live with her parents, someone who left the house at the age of 18. And that right there shows you that I was willing to sacrifice anything to be able to accomplish my dreams. Now, maybe you're someone who doesn't have a good relationship with your family and you can't go back live with your parents. That is fine because I also did other things. And the goal for me telling you that is that you have to sacrifice financially things that most people won't do. If you really want this house, you need to put yourself in that position where you sacrifice and you're able to save money for your dream if this is something that you really want. And the second thing I did was I paid off all my credit card debt. Now, before you say anything, I was an 18-year-old who had no education based on what credit is and how I should be spending my money. I was living paycheck to paycheck, making minimum wage. So of course I did what others did and used my credit card to pay for my food, to pay for my gas, which is a big no-no. So before I actually started saving up for the house, I paid off all my debt. So if you're someone who does have debt, please just pay it off because you will be paying 27%, 29% on a credit card or even your student loans. Not to mention, if you do pay off your debt, you will have more money to actually be able to save for this house. I remember when I was living paycheck to paycheck, I always thought that I did not have enough money to save, but the reality was that I was using my money to go out and eat, to go out and buy myself new clothes, to go out and watch a movie, and all of that money was going to waste. But I was always saying, Jazmin, you don't make enough money to save. But in reality, I was not living below my means, but instead I was living into lifestyle inflation. So you need to understand that you need to prioritize your savings. If not, this isn't going to work. So if you are someone who doesn't know how to budget, I did make a video, so I will put it up here. I personally use the Mint app because it automates all my transactions and puts it into the budgets that I have put into my app. And the cool thing is when I'm about to be close and hitting that budget, I get notifications, and that actually makes me take a moment and say, Jazmin, what are you doing? You said you were going to go out to eat. Now you spent $60. Those $60 could have helped you get closer to your goal of saving for a house. But I also want you to know that you can also automate your savings. If you know that you want to automatically save $50 every single week, why not do it and put it on an online savings account? Because listen, if you move this money to a savings account, you're not able to take out that money for a good 3 to 5 business days. That means that if you are going to be taking money out of this account, you will have to wait, which will actually motivate you to put more money in there because you can't take it out as fast as you have in cash. And the last thing I did was I had side hustles. My parents didn't know that I was selling books on eBay and on Amazon. I would go to Goodwill and I would look at college books, right? Most students actually give away their books to Goodwill without knowing the value of that book. There's astronomy books, chemistry books. I would sell those for $10, $15 and I would make money that way. And all that money that I would save, I would actually put it into my savings account. You can actually do multiple things. If you have time to go on social media or watch this video, you have time to walk dogs and make money, to work a part-time job. You have the opportunity right there. If you really, really want to get your first house or you want to become a real estate investor, you have to sacrifice time, effort, and of course money. So I would really urge you to find a way to make money on the side. And the secret here is I don't want you to tell anyone that you want to do this. Work in silence, because once you do accomplish this, and you can show everyone that you have the ability to follow your dreams. Now, hopefully I did bring you value. This was just my experience on how I was actually save for this house, how I was able to prepare for it, and what I've learned in this whole experience. Hopefully I was able to bring you some value, and if I did, don't forget to subscribe and hit the like button if I end up bringing you value. But most importantly, remember, be someone that makes you happy. And remember, if I can do this, you can do it too.